Welcome back to the Ready Set Crypto Futures Masterclass. This is module 8E. In this module, we're going to be talking specifically about the Digitex Futures Exchange. Very different from other vendors. We'll talk about how you actually get started on the Digitex Futures Exchange. To get started with the Digitex Futures Exchange, we'll go out to their website, which is digitexfutures.com. And the first thing that we want to do is we're going to go ahead, log in, and access to this page is forbidden because of the terms and conditions. And if we click on those terms and conditions, we see that if you are a citizen or resident of the United States, Quebec, Hong Kong, Sudan, any other country that they don't like, restricted jurisdiction, you can't get an access to this interface. However, there is a way around this, as most of you know, because Digitex does not do KYC or know your customer. So to get access to Digitex, all you need is two things: an email address and some Digitex tokens. And if you can show that you're not in this country by way of a different IP address, then you're good to go. Now, to get this video done, I have taken a virtual trip over to the UK via Manchester, and I have access to the site now. Now, the first prompt that you're going to get is whether or not you want to sign into the mainnet or to testnet. My recommendation is you start off, please, with testnet, because it's important that you understand exactly how to use the interface instead of what 99% of people do out there when they trade crypto futures, which is to fund the mainnet account and start playing around. And if you start playing around with this interface, you're going to quickly find that you don't know what you're doing. And you'll see why in a minute, that this is very different from other interfaces and can get you in a lot of trouble real fast if you don't know what you're doing. So the first thing I want you to do is to set up a testnet account. And we're going to do this and then bring up the testnet interface. Now, what you'll find is that this is going to be a little bit different. It's about the same, but it's going to be different because I'll show you mainnet in just a second here. So what I want you to notice that in the testnet interface, what you're going to find is relatively low liquidity. Notice the numbers of bids and offers sitting here in the ladder. Now, we're going to talk a lot about the ladder as we get into this video. But basically, this is the depth of market that's out there. And you can see some of the trades that have been placed is just one contract, the Digitex, which last time I looked was maybe less than 10 cents. So there's not a whole lot of activity in here right now. This is quite different from where it was just a few weeks ago when everybody was on the testnet. But this is what I want you to start with to get going, to familiarize yourself with the interface. This is why driving instructors put students through simulators first before they put them out on the road. Now, just real quick, some of the components that we have within the testnet interface you'll see are pretty much the same thing. First of all, we have a nice trading view chart plugin, which is great. You can also see what open positions that you have, trade history, or if you just want to close the position, there you go. And then this is what's called the trading ladder, or some call this the dome, depth of market, and then recent trades. So it all makes sense if you just go through the pieces and parts of what the interface has. But at this point, I think we go over to the mainnet interface and take a look at what's happening in the real world here. So the mainnet interface, let's go ahead and log in from our location here in Manchester, UK. And you're going to see it looks a little bit different. It's got a little bit different color structure and scheme. And what I want you to notice about the liquidity is, OMG, we have lots of liquidity now, big time. This is a production interface with heavy duty market makers and a lot of volume on it now. We also have a depth of market, your typical graph that you're used to seeing. We have time and sales and a lot of big trades happening in here. You can also see this is for your trades. as well too. Same thing here, open positions, unmatched orders. We'll get into all of these later. Order history, things like trade history. You can see, trades that we've taken, delayed actions history. This is if we have stops in place. And then of course we have our nice trading view plugin chart here as well too. Now, the first time you see this, you may say to yourself, look, I don't get it. Where's the big red and green buttons, over here that says buy, and there's another button that should be over here that says, sell, buy and sell. That's why do we have to go through all of this? And this doesn't make any sense to me. I just want my good old buy and sell buttons and just get me in at the market. Well, there's a reason why all of the professional futures traders around the world, regardless of the market, use what's called the ladder here, or the dome, whatever you want to call it. This has a slightly different implementation of it in Digitex versus other markets, but still it's the same thing. Now, as you get on the main net interface, so you sign up, you get an account, maybe you don't have any tokens yet, that's okay, because you'll learn to trade over on the testnet interface. The first thing I would recommend that you do is to go up here to the upper right-hand corner and go to the Start button. This actually makes a lot of sense for you to do this because they've done a pretty good job of putting in a little tour. So first of all, you can select the appearance of the interface, whether it's light or dark. I recommend that you pick dark. The dark interface is for those that want to save their eyeballs if you spend any time staring at the screen, which usually is with intention, and it can lead to a lot of eye strain if you use the light interface. Each to their own. I prefer dark if you're going to spend any time doing this. You can also pick different graph types, and this is what we're talking about. Graph types is over here. So you can either do tick that shows the actual individual ticks, or just a price bar, or the depth of market, which is the way I have it set here. Depth of market around the current price. From there, we'll go pick the next, and we have a balance. I currently have a balance. If you want to buy some Digitex tokens right out of the treasury, you can do so by selecting this button. We're not going to do that right now. I figured that most of you know how to fund an account. The next option here is just navigate, and what this is talking to is about the menu options up here: future spot, community, tournaments, account, help. From there, we're just going to go next, and right off the bat, desired leverage. And if you've listened to me on earlier programs, my preference is that you start with 1x leverage. Understand that leverage doesn't change the per contract or per tick value of a trade. That's due to the number of contracts that you select for the trade. All leverage does is allows you to trade with a smaller account. You can trade larger positions that wouldn't normally meet the initial margin requirements. So to me, this is very dangerous if you're just starting out and you're learning to build a system for this. There's no point in getting desired leverage. To me, this control is more of a, hey, how fast do you want to blow up your account? If you want to blow it up faster, then select something over here. And they're even talking about doing 100x leverage. There's a lot of people asking for 100x leverage. And to me, that is, it's extremely dangerous if you don't know how to tame the additional margin leverage. So stay with 1x to begin with, please, until you prove to yourself that you know what you're doing to manage risk and your system makes money over time. Again, you can select testnet or mainnet here. And with that, the tour is over. Let's go. We are now back to the interface. The next thing that we need to do right now when it comes to the Digitex futures interface is to understand how to use the trading ladder. And to do that, we have to understand a little bit more about auction theory. Here is our exchange again. Now, a couple of words before I move on here. I can't run this in full screen. Otherwise, what it does is it collapses the depth of market on the left-hand side. So we'll just kind of move things around here so that we can optimize the view. To focus on the Digitex Futures Exchange, we have to look at the ladder interface. We're going to spend most of our time right in this area here and understanding some terminology and understanding how to use this new interface. First of all, as we look at the ladder, the left-hand column are the bids. Now, the bids mean people that want to buy. They want to bid the price up. And so what they're doing is all of these numbers are the number of contracts sitting at a specific price. First of all, you'll notice that the price in Bitcoin versus the US dollar increments and decrements in $5 steps. This is called the tick size. Tick size is $5. That's a minimum increment in price that goes up or down. Now, what you'll see on the left-hand side over here, this is the spot price. This is the price of the actual Bitcoin versus the US dollar, which is measured through 4 different exchanges and averaged. So this is the spot price. This represents the authoritative price. And so what you'll see is that as the price gains up, maybe this highlighted area will move up to 365, then it goes up to 370, 375. That represents the Digitex futures price of BTC versus USD. So this is going to be the leading indicator of the price, the spot price. This is the underlying price. And then the lagging indicator is actually going to be the futures price. But we don't trade the spot, we trade the futures price. So back to bids. Bids on the left-hand side, this is for people that are wanting to go long. And these all represent limit orders below the price from people that want to buy. For example, like this is 11,360. There's 2,500, 3,000 contracts sitting here waiting to go long. Now, they can put those on and take those off as they want to. So in other words, we can put a contract down here to go long at 11,360. So that's a limit order to go long. I can cancel that as well too. Or I can move that down to here at 11,350. Remember, the lower the price that I get filled, the more advantage that I have if I want to go long. And I can also take that off again. So remember, think of this as the demand, and we've all seen this type of graph on the left-hand side before, this depth of market, and we know that there's a buy wall down here when we have just a ton of contracts. Based on the price, we can see that it jumps up here because of 10,000 sitting here at this level. So this is something that we're used to looking at, perhaps just not looking at this as it's represented on a depth of market in the ladder. So left-hand side bids, this is if you want to go long. Right-hand side, above the price, these are offers. This is if you want to sell. And if you think about it, a successful long transaction starts when you buy something down here below the current price or maybe even at the current price, and then you sell it at a higher price. Buy low, sell high. Or you can do the same thing in reverse. If you sell to open and then buy it later on at a lower price. So remember, futures trading is bidirectional. You can either go buy long and sell higher, or you can sell short and buy lower. Now, the great thing about the Digitex Futures Exchange is if I want to get filled at a price right here, I can sell it back out at the same price without incurring a commission. So I can get filled at 11,370 long, and I can sell it right back out at 11,370 with a sell order. I didn't make any money, but at the same time, I did not pay any commissions on that transaction. With most futures exchanges, you have to cover at least 2 to 3 ticks of positive price gain, or selling high and covering lower by at least 2 to 3 ticks for you to overcome the friction of commissions. And that is just not the case here with Digitex. And you can see this within the My Trades over here. This is the time and sales, and then My Trades is represented in this area down here. You can see that I got in long at 1307.56 and sold out at 1308 at the same price. Long in, short out, no net gain, but at the same time, no commissions. Now, how much money can you make on each tick higher? So if Bitcoin goes $5 higher, how much are you going to make? That all depends on the number of contracts that you're trading, not the leverage, but the number of contracts that you're trading. So if I'm going to trade one contract here, down here, first of all, I have to get filled first for me to understand how far each one is going to go. But if you look down here, the tick value is 0.1 Digitex. So if I were to be filled here at 11,370, it would have to move up 10 points, 10 ticks for me to make one more Digitex on my one contract. So one contract is a very small number, as you'll soon get to see. Now I'm just going to get filled here so that you can see how this goes 0.1, 0.2, 0.3, all the way up to 1.0, right? So let's see if we can just clear this trade and go back to square one. So now let's try a different experiment where we're going to go to 10 contracts. And I'm just going to get filled long down here. And I'm filled long 10. You can see that this says plus 10 up here. That indicates a position size. And now, because we have 0.1 tick value per tick, it's going to increment by 0.1 of position, or in this case, one actual Digitex per tick. So experiment with this on testnet so that you understand the correlation between tick size, position size, and how much this is going to go up or down, also depending on whether you're submitting bids or offers. If you want to go long, again, you're going to hit on the left-hand side. If you're going to go short to open the position, you're going to start the position with a limit order over here. Now, the next thing I want you to watch is watch how the white numbers will appear on either side. So these numbers here are the number of bids sitting on each price of BTC versus US dollar. They will change. They're not going to be fixed. They're not going to be static. They'll change as people either add or subtract contracts from that position depending on what's happening. This is also going to change depending on what the market makers are doing, which are automated bots. Same thing's happening on the offer side as well. These are a changing number of contracts that are limit orders above the current price. Now, what I want you to watch for is the white number here, and this represents which way the bids and offers are moving. It's sort of the dynamic read. And the easy way to think of this is that if you see this number incrementing over here, so if you see the white number showing up over here, what's happening is it's pushing down on the price. The number of offers is increasing, and it's upsetting the balance between bids and offers. So if the number of offers overwhelms and eats through these bids, then it's going to move down in price down to here until a balance is struck. So get to watch this and understand what's happening as the dynamic between them. Also, in correlation with the spot price, will kind of give you an idea. In this case, here we're starting to see bids moving up, and this indicates a little bit of strength in price. If we start to see this increment and chew through all the offers on that, then we're going to see the price increment up. And this is how auction theory works, right? This is always a dynamic at every price as to who's winning, those on the offer side or those on the bid side. If the offer side is overwhelming the bid side, then we'll see the price move down. If the bid side is overwhelming the offers, then we'll see the price move up as it is right now. You can also see this on the price chart as the auction theory plays out in real time. And this is all going to be keyed off of the spot price. So the spot price is out there. And then what's happening is the futures contracts are happening. The auction theory is happening on the bids and offers around that spot price. So again, it's very simple. If you want to go long, you're clicking down here with a limit order. And a limit order means that you're not going to get filled. So if I place a 10 contract limit order, it's not going to get filled until it chews through all of these bids. I have to get in line. I'm not at the front of the line. I'm all the way at the back of the line for that given moment, right? There's people that come in behind me as well too. So you're never quite sure exactly where in line that you are, but it's got to chew through all of this supply down here before I'm going to get filled. So for those of you that want to just get filled right now at the current price, this is where you can just simply click at the money or in this case, at the money right there, and just take a market fill. And then boom, there you are. You're filled, and then you can just as easily get out as well too. So for you to understand how to use the ladder, step one, go over to the testnet interface. Please don't figure this out live with Live Capital. But there's really no point in doing that. You can do this for free on the testnet interface. Learn how to use the interface first of all. Long is on the left-hand side, the bid side. Short is on the right-hand side, the offer side. One last thing here before we get into advanced orders and position management in the next section is that if you click anywhere up in here without numbers, so if I click on the bid side anywhere up here, that is a market order. That says fill me right now. And the same thing happens down here. If I click anywhere down here, that's a market order that says get me out right now. So you can see actually it didn't work against me. I got in at 390, out at 390. No friction, no commissions, no nothing. No harm, no foul. But remember that if you want a limit order, you have to click down here where the numbers are, and that is placing the bid below the current price. The price is going to come down here to fill you. Same thing for the limit order on the right-hand side. If you want to sell to open, you're setting a limit above the price. The price will not fill you. The exchange will not fill you until the price comes up through there and chews through all the offers that are in front of you in the line. That is how auction theory works. And remember, if you click down in here, either through intent or through accident, you will be filled immediately on that side. And if that's the other side of the order, then you'll be closed immediately. Or if it's on the same side as the current order, you'll just double your position with another section of the contracts at the market. Okay, now that we know how to go long and go short on the position, we know how to open up a position. Let's go to the next section where we talk about how to manage a position, a live position, and close it. Now we're going to get into the position management. Once we're into a live position, how do we exit that at profit, or how do we exit that at a defined stop loss? Now, so far, all we've done is talk about limit orders. What I'm going to do here is get into a position, and I can do that any number of ways. We have the price going down, currently down to a support area, so perhaps this is a time where I might want to enter a position at a limit which is slightly below where the current price is trading, which you can see at the spot level. So I'm going to put myself in line here with a limit order at about 11,165, which it's going to have to chew through all of this to get down to there and fill me in line with that. Okay, so I'm filled, and you can see that by the +1 up there. So I have a +1. Now we can take a look at the open positions. Open positions here. I don't have any unmatched orders. I don't have any delayed actions. I do have a matched order right now, which is a long at 11,165. Now, if I want to, I can just close this position at market and just get out of this right now. Okay, the price is going down. It's going against my position. You can see the unrealized P&L, which is up here, -0.3 Digitex. So the first thing that I want to do is I want to set up a limit sell up here. And the way I would do that is to go above my entry price, and then whatever my profit target is, I would simply click in the sell side. So now I have, you can see by this up here, I have one sell, which is up here at 11,175. And now I have an unmatched order because this has not been filled yet. So this is a limit sell at 11,175. Now, what should my stop be, and how should I do something like that? Well, you can always, if you want to, you can always just blow out of the position. Remember, if you click down here below the numbers, I can get out at a market sell. So if the market just starts getting destroyed, which is kind of is what it's doing right now, and it's well below what you're comfortable with in terms of your loss, you can just simply click over here and execute a stop exit. You can also do the same thing by, in your open positions, you can just go over here and close. Now, we're not going to do this because we're limiting, our risk to one Digitex, and we're down 1.6 Digitex, which is, 10 cents or something like that. But it might make sense for me to put a stop loss in now below the tail or the wick of this down here at about 10,900. So if the price comes down to 10,900 again, I want to stop myself out of this. Otherwise, I'm going to still have my limit order up here at 11,175. So how would I put that stop loss order in? I'm going to go up to Tools. And I'm hoping that this actually changes down the road where it's a simpler process to put a stop loss in. Chances are pretty good that that'll happen down the road where we can put in one cancel other bracket orders. But right now you have to manually create a bracket. So under Tools, you can see limit, market, stop limit, things like this. And what I'm going to do is select stop market. This is what I want to use to be able to get out of a trade at the price level that I determine. I'm going to execute a stop order at market at that specific price. Okay, so in this case, a stop market, I want to sell because I bought to open, so I want to sell to close. The trigger price is going to be down there at 10,900. Okay, so that's my trigger price. I have to enter my quantity. Don't worry about this for right now. And then all I need to do is to place that order. And you can see success, conditional order has been placed. You can also see that I have a delayed actions order, good till cancel market order, sell one if spot price is less than or equal to 10,900. That's exactly what I want. So now I have my bracket basically built in. And to put this on the price chart, you can see, and maybe someday we'll have these orders show up on the price chart, but I have a stop down here at 10,900, and I have a limit sell up here at 11,175. So now I built my bracket. However, this is not one cancels other. That's important to understand. So if you have any experience trading futures using bracket orders or one cancels others, what this means is that if either of these are hit, whether or not my sell limit is hit up here for a profit or my stop is hit for a loss, then it cancels the other side. Otherwise, what's going to happen is I've got a good till cancel market order to sell down here sitting out there, and it will remain good till cancel until I tear that down. So this is what I have to do. I'm going to undo the drawing here, see what's happening with the price. The price is coming up higher. It's getting closer and closer to our sell limit. Our stop is way down here at 10,900. Unfortunately, it's not marked on the ladder. And that's something that you'll have to understand as well too. So this is the first iteration of this interface. I would expect within a year, we're going to have all kinds of different modifications to this and much more interface friendly form of managing a position. So that's the basics of it. If you're going to go long, then what you want to do is, as soon as you go long, what you're going to want to do is to put in a sell limit for whatever your price target is, which is above your entry point. And then immediately go over here to stop market and create a sell stop market position below the current price, and then place that order to create your bracket. Now, after the trade executes, whether or not the stop gets hit or whether your other unmatched order, which is the limit sell up here at 11,175 gets hit, depending on which one gets hit, you're going to have to tear down the other side. Otherwise, you're going to leave unmatched orders out there, which will fill. I guarantee as soon as you shut down the interface and walk away, at some point you'll fill. The next time you boot up the interface, all of a sudden you realize you've got a rogue position out there floating away. And my experience with rogue positions is that they rarely go in your favor. I don't know what it is about that, but they rarely go in your favor. You're not going to wake up and all of a sudden you're up, 3,000 Digitex tokens. So you've got to be disciplined after each trade executes one side or the other, whether or not you get stopped out or your limit sell out is your profit target. Go back and clean up the unmatched orders that are out there. Now, something else about position sizing, if I want to, what I can do is I can continue to raise my stop. So what I can do is I can cancel this one and then resubmit it. So maybe what I want to do is I want to set this up for 11,040 now. And we're just about to get out of this trade. We're about to hit our profit. So we'll see whether or not this bumps up here to 11,175. But what I can do is I can cancel my stop. Now, I can cancel that stop, go back over here, and then set this up for 11,040. Okay, so we're going to place that order, and conditional order has been placed. We have canceled that one. Okay, we want to make sure that one is canceled. So now it is. So 11,040, which is up down here, 11,040. So I've raised the stop up. And so it's now sitting there, 11,040, which is down in this area right there. Again, it does not show up on the ladder, but I've raised the stop for this. And you can continue to do this. You can play this game. We still have one contract in play here. And somehow I have managed to undo that contract up here. I must have clicked on the 11,175. If you click this again right there, this will take this off. Watch that carefully. Make sure that you know exactly where your limit orders are, where your stop is. If I wanted to, I could drag this up. If I felt that the move was strong enough to provide further gains, if I had a change in plan, then I could simply click this once and remove it, and then maybe move it up to here. So all kinds of things that you can do. This is what's great about the ladder interface, is that I don't have to go back and manually change these. Now for the stops, yes, I do. The stops, I have to change these. So if I want to, now I can raise the stop up here to about 11,080, 11,080. So I'm going to go over to the delayed actions. I'm going to cancel this one and then change this to 11,080. Place the order. There's my stop in place, 11,080. And now it's down here. So I'm only risking about 1.7 Digitex tokens right now. Again, the limits order over here, you can see 1, and that matches what's out there. You can also right click onto this area, depending on how many tokens that you have long. You can right click in this area and this will automatically match your order for that. I keep hoping that this trade is going to conclude here so that we can kind of wrap things up. But hopefully you get the idea, is that what you're doing is, if you're long, and I'll talk about going short here in a minute, but if you're long, you're basically going to enter a limit order down here. And then as soon as you enter that limit order and get filled, and you'll see that you're filled based on this showing a positive quantity, then you're going to go over to the other side, the offer side, and then you're going to put a matched order in here. And this is going to show as an unmatched order, actually. But that same quantity, so that limit order, you're going to put a limit order up here for the same quantity. That's your profit target. Then what you're going to do is you're going to come down here and determine what your stop value is. You'll go into Tools, Stop Market, Sell, enter the price. Be careful that you enter the correct price, the correct quantity, place the order, and then you have a bracket set up. As soon as one side or the other gets filled, you have to immediately go tear down the other one. So you're going to have to null out all of the unmatched and matched orders and make sure that everything is back to 0 at the end of that trade. You don't want to leave orders just floating around out there. All right, let's talk about what you would have to do to set up a sell order or short order. Same thing here is that you're going to enter a limit order up here above the price, get filled, or maybe you're just going to enter at the price. You're going to get filled. Now you're going to be short. This is going to show -1 contract up here in terms of quantity. Immediately you will go down and determine what your profit target is. Put a matching order, matching size order. This is going to say an unmatched order down here for your target limit. So you've been filled short. You need to put up a limit order on the opposite side. In this case, the buy side, buy to close, is going to close that order. And then go into stop market, and then you're going to issue a buy stop, which is going to be above the price, and the buy stop is going to be above the price, same quantity, execute that, and then this will show up under delayed action orders. And make sure that whether or not you enter or get filled at the profit target or get stopped out, that you go back and close any unmatched orders or delayed action orders that are out there. Make sure you clean up after every trade. Eventually, we'll have one cancels other bracket orders into Digitex. I've asked about this over the years, and it's always somewhere down the roadmap. And that's the way that professionals trade generally with bracket orders, to make sure that as soon as they enter, their risk and their targets are set right off the bat. Those can always be changed. You can always move your stop up, things like that. But to start out with the initial bracket order is something that's very important. And so you have to build that right now manually. And we're still not out of this position yet. So we're going to wrap things up here. And in the next video, what I'll do is I'll go over different types of trading strategies that you can use on Digitex. It's going to be slightly different from what we use with other futures brokers. So that'll be in the next video. We'll see you over there.